Welcome to Invest Giant. Learn, invest, build your net worth. Let's talk about building long-term wealth. Today, we're diving into one of my favorite strategies, dividend investing. Specifically, we're going to learn how to invest like the legend himself, Warren Buffett. Now, Buffett is known for his value investing approach, and a key part of that is finding companies with a proven track record of success and a commitment to sharing profits with their shareholders. That's where dividend stocks come in. These are companies that pay out a portion of their earnings to investors on a regular basis, providing a steady stream of passive income. We're going to be looking at 5 of Warren Buffett's top dividend stock picks, breaking down why he likes them, and why you might consider adding them to your own portfolio. Alright, let's jump right in. First up we have Coca-Cola, ticker symbol KO. Now you might be thinking Coca-Cola? Really? But hear me out, this company is a dividend king, meaning they've increased their dividend payments for at least 50 consecutive years. Let that sink in for a second. 50 years, that's longer than many of you watching have been alive. Coca-Cola's consistency is insane. They've managed to weather recessions, market crashes, and even changing consumer tastes. That kind of stability is exactly what Warren Buffett looks for in a long-term investment. Think about it, Coca-Cola is a global brand recognized in practically every corner of the world. Their products are everywhere, from grocery stores to vending machines to fast food chains. This massive distribution network gives them a competitive advantage that's incredibly difficult to replicate. And let's not forget about the power of dividends. Imagine reinvesting those quarterly payouts back into Coca-Cola stock. Over time, thanks to the magic of compounding, your investment can snowball, potentially generating significant wealth. So while Coca-Cola might not be the flashiest stock, it's a classic example of a Warren Buffett-style investment, a solid, dependable company with a long history of paying dividends and a bright future ahead. Next, we're taking a look at a tech giant that's been a bit overlooked lately, IBM, ticker symbol IBM. Now, IBM might not have the same hype as some of the newer tech companies, but that doesn't mean it's not a smart investment. Warren Buffett sees value where others don't, and he's been buying up IBM stock for a while now. IBM is a cash flow machine generating billions in free cash flow every year. This allows them to invest in growth, pay down debt, and return money to shareholders through dividends. IBM has been paying a dividend for over 100 years, increasing it for 28 consecutive years. That's the kind of consistency and commitment to shareholders that Warren Buffett loves. IBM has faced challenges as the tech landscape has shifted, but they're transforming their business to focus on high-growth areas like cloud computing, AI, and data analytics. These are the technologies of the future, and IBM is positioning itself to be a leader. Of course, any turnaround story comes with its risks, but Warren Buffett is a long-term investor, betting that IBM's transformation will pay off. He sees a company with a strong foundation, a history of innovation, and a commitment to rewarding shareholders. And that, my friends, is the making of a classic Warren Buffett value play. Chapter 3. For our third stock, we're diving into the world of retail with Walmart, ticker symbol WMT. Now you might think of Walmart as just a discount retailer, but they're so much more than that. They're a retail behemoth with a global reach and a dominant position in the market. Warren Buffett loves companies with a wide moat, meaning they have a competitive advantage that's difficult for others to overcome. And Walmart's moat is about as wide as it gets. They have a massive network of stores, a highly efficient supply chain, and a reputation for low prices that's unmatched in the industry. Let's talk about that scale for a second. Walmart has over 10,500 stores in 24 countries, serving millions of customers every single day. That kind of reach gives them incredible bargaining power with suppliers, allowing them to keep their prices low and their margins healthy. But Walmart is not just about brick-and-mortar stores anymore. They're aggressively expanding their e-commerce operations, taking on Amazon head-on. And they're doing a pretty darn good job of it. Walmart's online sales have been growing at a rapid pace, proving that they can compete in the digital world. Now let's talk dividends. Walmart has been increasing its dividend payments for 49 consecutive years, putting them just 1 year away from Dividend King status. That's nearly half a century of rewarding shareholders through thick and thin. Investing in Walmart is like investing in a rock-solid fortress. Chapter 4. Up next, we have a company that's practically a household name, Procter & Gamble, ticker symbol PG. They're the brains behind some of the most iconic and trusted brands in the world. from Tide detergent and Crest toothpaste to Gillette razors and Pampers diapers. Warren Buffett loves companies with a diversified portfolio of strong brands, and Procter & Gamble fits the bill perfectly. They have a staggering 65 brands, many of which are market leaders in their respective categories. This kind of brand recognition and customer loyalty gives Procter & Gamble a significant competitive advantage. People trust these brands, they've been using them for years, and they're willing to pay a premium for the quality and consistency they offer. But Procter & Gamble isn't just resting on its laurels. They're constantly innovating, developing new products, and improving existing ones to stay ahead of the curve. They're also expanding into new markets, bringing their brands to a global audience. Now, let's talk dividends. Procter & Gamble is a dividend aristocrat, meaning they've increased their dividend payments for at least 25 consecutive years. In fact, they've increased their dividend for an incredible 66 consecutive years. That's more than 6 decades of consistent dividend growth, a testament to their commitment to rewarding shareholders. Investing in Procter & Gamble is like investing in the stability and predictability of everyday life. Chapter 5. Last but not least, we have Verizon Communications, ticker symbol VZ, a telecommunications giant that's been connecting people for decades. Now, you might think of Verizon as just a phone company, but they're so much more than that. They're a leading provider of wireless, internet, and television services, and they're at the forefront of the 5G revolution that's transforming the way we live, work, and communicate. Warren Buffett loves companies with a strong competitive position in a growing industry, and Verizon checks both of those boxes. They have a vast network infrastructure covering millions of customers across the United States. This gives them a significant advantage over smaller competitors, as building out a comparable network would be incredibly expensive and time-consuming. And with the rollout of 5G, Verizon is well positioned to capitalize on the increasing demand for faster, more reliable wireless connections. 5G is about more than just faster download speeds. It's about connecting everything, from our phones and computers to our cars and homes. This is the future of connectivity, and Verizon is leading the charge. Now let's talk dividends. Verizon has been increasing its dividend payments for 18 consecutive years, making them a solid dividend contender on track to becoming an aristocrat. They have a healthy payout ratio, meaning they're not paying out more in dividends than they can afford, which is essential for long-term dividend sustainability. Investing in Verizon is like investing in the infrastructure of the future. There you have it. 5 dividend stocks that can help you invest like Warren Buffett. These companies have a proven track record of success, strong competitive advantages, and a commitment to returning value to shareholders through dividends. Remember, these are just a starting point. It's essential to do your own research, consider your own financial goals and risk tolerance, and consult with a financial advisor before making any investment decisions. If you enjoyed this video and found it helpful, don't forget to give it a thumbs up. Subscribe to the channel for more investing tips and insights. Thanks for watching, and happy investing.